So, Lisa, Andrew, thank you for coming in. So the reason that, you remember I talked to you and set this up on the phone for the mortgage protection, right? Yeah. So the only time I get these forms is either there's a new purchase, a refinance, or a line of credit. So is this a purchase?
New purchase.
New purchase.
Yes.
Okay, and so is it a 30-year?
Mm-hmm.
Got it. Okay. All right, well, so here's my process. Usually it takes me about 5 minutes to see what's the most suitable recommendation. Everybody's different, but it says here that your mortgage is $300,000. You guys did this in January, $300,000 with BECU, is that right?
Correct.
Okay, great. All right, so the objective here is to make sure that in the event of your death or disability, just like it says on the form, to make sure that your stuff stays with your people, so to speak, right? Does that make sense?
Yeah.
Okay, so monthly household income, approximately, what would you guys say is a monthly household income?
13,000.
I make 5,000.
So I'm making about 12. So about 16,000.
16, okay, and so you're 12 of the 16? Okay, so 12, and then Andrew, you said you were 5, or?
About 4.
About 4, okay. All right, very good. And then how much is the mortgage?
3,300.
33, got it. Okay, and then you said it was a 30-year. So are you guys making just one monthly payment? You are,
Yeah.
okay.
Yeah.
Now you know that you can save yourself some money if you make 2 half payments. So if you're 3,300, and so that's what, 1,650, somewhere in there, right?
Yeah.
So if you did 1,650 every 2 weeks, here's how it works. And this is not my math, this is the lenders, checked with them. I actually do this myself, to tell you the truth. So a 30-year mortgage, and there's 52 weeks in a year. And so that means there would be 26 half payments every other week. 52 and a half is 26. So 26 half payments means 13 full payments. So 1 extra mortgage payment, but it's spread out over the course of a year. So it's still kind of head faking your budget a little bit. So it feels like it's still the 3,300 from a budget standpoint.
Okay.
But it actually shaves 7 years off the life of a 30-year mortgage.
Wow.
So, I mean, that's real math. Let me just look at my little computer here and do some quick numbers for you. So 3,300 times, times 12 times 7. So that's $279,000, unless my math is off. I mean, that's a lot of money, right? 3,330.
You should do that.
So times 12 times 7. Yeah, 279. So a question I get all the time, well, it's like, what if we're not here 30 years? All right, well, say you're here 10 years and you flip it and turn it into a rental, whatever, let somebody else keep that schedule and pay down your 30-year loan in 23 years. It's just basically getting to the balance of the loan quicker by breaking up the payment schedule and that extra payment. It really does cut into it, and it makes sense.
That's a great tip.
So do you know what the equity is in your place? I know you just got into it, but you bought in obviously at 300, or did you put some down?
We did a 20% down.
You did,
Yeah.
okay. So it's probably somewhere around 500 or more. Are they going for more in the area? Do you have any equity in the house that you know of?
I think maybe just a small amount, but I'm not really sure.
Maybe like,
Chip pays, I don't know.
Yeah.
so 20, 30K, so some
Yeah.
small amount.
Yeah.
But basically it was, let's just get in here.
Okay.
All right, so that's great. Well, definitely, so I don't get paid for that piece, this free advice. I mean, just don't, it's free money. So here's how you talk to your lender, you say, I wanna go on an every other week schedule, they'll squawk at you. I did this with Loan Depot, and they squawked at me, and I pushed through it, and I said, just send me the form. They did. It took 5 minutes, sent it back in, they started taking it out. My mortgage is $4 grand, okay? I live like a half mile from here.
Okay.
Every 2 weeks, $2 grand. And they actually sent me the calculation, and it was like $107,000 savings, and I was in year 13 of a 15-year contract and did this. And I'm still gonna save 2.78 years.
Wow.
So, I mean, it's legit, and it's free money, so spend the 5 minutes, definitely. All right, so we know what your mortgage is, what your payment. How about utilities? Have you paid enough of the utilities to know?
They're
Just
about
water, power, sewer, gas,
about
internet?
$250.
Got it. Do you have any car payments?
No, our cars are paid off.
Car payments. So car insurance.
About $300 for the year for both of them. I mean, a month for
Got
both
it.
cars. Sorry.
Okay. Any credit card debt?
No.
So is it just the two of you in the house? Okay.
Yeah.
All right.
We're thinking of building a family.
Oh, nice. Very nice. Okay, so do you guys stay in or do you go out? How much is food per month?
I mean, we do go out quite a bit, like $800 total.
Yeah.
About 800?
Yeah.
That sounds about right. Yeah, well, enjoy it while you can. I've got 3 kids and 5 grandkids, so go out as soon as you can, as often as you can. Though you're looking to start a family, those days may be over soon, yeah. That 800 may stay the same, but it'll move around a little bit. All right, do you guys drive a lot? How about gas? How much is gas in a month?
200.
Couple hundred?
200.
Yeah, like 50, 60 bucks to fill up?
Yeah.
All right, charity, do you give on a regular basis? Friends, family, church?
About $500 a month.
Got it. You're a charitable group. I like that. Any miscellaneous bucket here? Student loans, travel budget you set aside, any healthcare issues, the medication costs?
About $500 a month.
Okay, so a student loan?
Just miscellaneous.
Just extra
Yeah,
stuff, just
yeah.
kind of a catch-all. All right, that's fine. All right, so let me do some math. We got 16K minus 3, 13. So it looks like, and so that the 4 and the 12 was gross. Okay, so we can knock off probably 25 just conservatively there. So 16 and 14. So it looks like we have about $10,000 left over after we pay the bills. Does that sound about right?
Yeah.
Okay, so does that go in the bank? Are you guys savers? On any given Tuesday, if you poke your nose in the bank, what do you normally see as a balance? Just an average.
8,000.
About 8?
Yeah, about 8,000.
Okay.
Yeah.
So you've got disposable income of 10 and 8's in the bank. So you guys probably went all in to get into the place. So
did.
let's make sure that we keep you in the place, right?
Yeah.
All right. So now I know why I'm here, right?
Yeah.
Okay. So the next section of this is, do you have anything that looks or acts like life insurance? And what I mean by that, in the event of your death, would anything that you have from an investment, 401k, IRA, have a death benefit that would go to a beneficiary? Any 401ks in the house?
We both have 401ks.
Oh, you do?
Yeah.
So do you know approximately how much you have in yours, Lisa?
I think mine's about 412.
412, okay.
Andrew's is about 260.
Ooh, nice. So you've been at this a while, great. So IRA, money market, annuities, CD stocks, just the 401ks?
Just the 401. Yeah.
Okay. And so what do you think about this market that we're in? Does it make you nervous at all?
Very
It's
much.
been pretty crazy.
It's been real crazy.
So you've been in these a while, I can tell with
Yeah.
those numbers. I do a lot of these. We're not talking about that here today, but if the market makes you nervous, if I could show you something that would remove market risk but still allow for upside gain, does that sound something like you'd be interested in? All right, so just remind me before we're done here to set a follow-up to talk about protecting your hard-earned money for retirement, okay?
Okay.
And we'll get back to this.
Okay.
All right, do you have any life insurance presently?
We don't.
You don't?
No.
So nothing at work?
Don't you have something at work, honey?
Yeah, this is like $10,000. That's
Okay, so you've got I call them rental policies. So as long as you're there, it's great. It's kind of like a company car. When you leave, you have to give the keys back. It's not your car. This is a benefit while you're employed there, which is great, but you don't own it. Everyone would rather own something than rent something. Lisa, nothing for you?
No.
No benefit, okay.
No.
And then identity protection, it's just on my list of things here. Do you have identity protection in the house?
Do we have?
I don't think
I don't think we do.
Okay, well, we can talk about that for sure. It's the fastest growing crime in the United States. It's really inexpensive. It takes just a second to put in place. So if that's of interest, I'll just circle that and we can definitely come back to that. All right, so now we're going to talk about your health. Any medications?
Vitamins.
Vitamins?
Yeah, no medication.
So no heart attack, stroke, cancer. Do you do risky things? Do you like cave divers, weekend daredevils on your way to the Sudan anytime soon?
No.
No criminal history?
No.
Wow. I'm going to have to give you an A+.
Wow.
Same thing for you, Andrew, A+.
All right.
Fantastic. All right, so here's the deal. At this point, my business card's there. What I do is on the front. Who I do it with is on the back. So here's all the carriers as a broker that I represent. They're all A-rated, which means that they're, over 100 years old. They pay their bills, right? You don't want to outlive your insurance carrier. So they've been here for generations. And an A rating means that an independent oversight group, Fitch, Moody's, AM Best, Standard & Poor's, they give scorecards, kind of like Yelp or Better Business Bureau, but for people that handle money, insurance companies, banks, credit unions, that kind of thing. So they're all old and they're A-rated or better. I can put anybody on the back of my card. I choose household names. So it's my job to make the best recommendation for you, but I'll be, and I have been narrowing in recommendations as we've been talking across those carriers' product mix. But these are the 5 things that I do, and today, like we talked about, we're focused on mortgage protection. So that's yours to keep. Now, here's how insurance works. In a house, there's 3 types. There's property and casualty, that protects your stuff, fires and floods. And then there's PMI, that's the bank lender protecting the bank. People often confuse PMI with what I do. Private mortgage insurance is something that the lender can offer. If you miss a payment, they'll step in to preserve your credit, but that's not to pay off your house. That's not to protect you. I am the one that represents the 3rd and final kind of insurance in a home, and that's mortgage protection life insurance. So, by the way, at your age, at your earning potential, the biggest asset in this house is in fact you. It's not your house. It's a nice house, but it's you. We're here to protect you in case of death or disability. The people that are still alive need to be taken care of, and so that's why we're here talking about this. So there's 3 kinds of insurance. There's term. So term starts and ends. Typically comes in 10, 20, 30-year increments. It can be chopped up in 5 years, but it's essentially 10, 20. It starts and it stops. And have you heard of term? Mm-hmm. Okay. So term is typically the least expensive, the shorter the period, essentially risk. The less risk the insurance company takes on, the less you'll pay. So you're managing risk, that's why we're sitting here. They are also managing risk. So this is all about managing risk. With term, it starts and ends 10, 20, 30, and it can come with stuff or no stuff. And by stuff, I mean like accidental. So it's not that you just have a heart attack and die, you were in a car crash. So accidental can add additional death benefits to a policy. Could have living benefits. So that's the death or disability. Living benefits are if you're critically ill, like a heart attack, but you don't die. If you're chronically ill, you're in a car crash and you're in traction and you can't move for 3-4 months because you're not dead, but you're going nowhere soon. So you can't feed yourself, you can't medicate yourself, you need assistance, you're chronically ill, something that keeps you from 2 of the 6 daily living activities, feeding, medicating, clothing, toileting, moving from the bed to the sofa. And you can't do 2 of the 6 daily living activities. I know that was only 5, but 2 of the 6, and that's considered chronic. You have to have a doctor's note, okay? Critical, chronic, and terminal illness. If you have less than a year to live, doctor's note, then that would be you can drain with living benefits from the death benefit to pay your bills. So you've got death, disability, accidental, that's stuff in a term policy.
Is it easy to get access to that money if something happened to one of us?
So the deal is that first you have to qualify, and that's why we're here today, to see what you do qualify for. Once you qualify, the policy goes into great detail about if you were to experience critical, chronic, or terminal illness, doctors know. You reach out to the carrier and you say, hey, I'm critically ill. I need to access some of my death benefits to pay my bills, right? That's how that works. And then if I am your agent, I step in and I help with that process, absolutely. All right, so number one is term. Number two is universal. Universal is every group policy you've ever had at work. That's why it's annual enrollment time, because it's a one-year term. And you typically pay on a monthly basis, but if you don't renew it, it'll lapse. You have to fund it. As long as you adequately fund a universal life policy, it doesn't lapse. It's what they call a permanent policy. If you set up a universal life correctly, you fund it and you pay for it, it's like permanent, like in that way, the third kind, whole life. So term is a hybrid. It can end if you don't fund it, but whole life is the one for your whole life. Universal can be like whole life. So term, universal, whole life, right? My recommendation for you, honestly, based on your age and your health and your budget, because I normally like to stick to somewhere right around 15%, 16% of disposable income. So the policy I'm liking for you guys is with a carrier called Americo. It's one of our lead carriers. They're over 100 years old. They've got, $7+ billion in the bank, no debt, great rating. And the reason that I like this for you is that it has what is the best stuff in a term policy is the return of premium. So have you heard of a return of premium?
Kind of.
So let me just go over it for you real quick. Let's say that we can get you into these return of premium policies and they're 30 years. So that's the life of your mortgage. If you don't do what I was recommending and you're on it for 30 years, or maybe you do what I was recommending and you're only on it for 23 years, we can write a policy for 25 or 30 years. And at the end of that term, if you're still alive, all the money you paid in comes back. So it's a return of premium. So it also has, obviously, the death benefit. It's got disability, so critical, chronic, terminal illness. Up to 100% of the death benefit can be pulled out for disability, doctors know. And then it has terminal illness, obviously. And then there's accidental in there at 50% of the face value. So it's called the HMS 150, okay, cashback option. And I'm going to say your loan's $300. You still owe all of it, so it's still at risk. And Lisa, with you bringing in the 12, and so we're going to do something like this. So $300,000 on you, Lisa. If you didn't come home tonight, what would that do to Andrew? I mean, 3/4 of the income would go away, and you've got about 1 month's bills in the bank. So where would Andrew be going? You guys have been married, what, 5 years now? In the house just a couple months?
Almost 6 years.
Almost 6 years?
Yeah.
So, I mean, have you given, is that probably what you were thinking about when you filled this out?
We did.
Making sure that that's, okay.
Yeah.
Well, that's what most people do. All right, so $300,000 I would say on you, and then the accidental death benefit is another $150,000. So if you were in a car crash and died from that, it would actually be $450 that would come in the house. And then there's a common carrier accidental death benefit that's attached to this as well. So that's another $150. So it's half of the death benefit, the face value of $300. So it takes, if anyone you pay a fare to, plane, train, bus, Uber, taxi, Ferris wheel, if you were in a terminal fatal accident in a common carrier, they add another 50%. And then you've got the living benefits, like I talked about, critical, chronic, terminal illness. You can access up to 100% of the death benefit while you're alive. That's huge. So you know, life is crazy that way. I mean, you just never know. Health can change just like that.
Can I ask you a quick question?
Yeah.
So on the common carrier, you're saying if I was in an airplane.
Yeah.
And the airplane crashed,
Yeah.
and that's an accident
Right.
in a common carrier, that would be another 300,000 on the 300,000?
That's right.
Oh,
So
wow.
if it was a fatal plane, train, bus, Uber, and you know, obviously they would want to know how it's basically on the death certificate, you know, cause of death, accidental, and common carrier accidental would be a doubling of the death benefit from 3 to 6. And then let me just do some quick math here. So let's see, at 37 and 300,000, so that's 212 a month. And then for 300,000 on Andrew, because I'm sure that you would want to leave the house debt-free to Lisa if you were to pass away. Is that true? Okay. That's what I was thinking. All right, so Andrew. Okay, so that's 169. All right, so let's say 169 times 12 times 30. So 60,840. And then Lisa, for yours is 212. So 212 times 30. So yours is 76,320. All right, so the most that Lisa, you will pay for your $300,000 policy is $76,000. And so you lived 30 days and 30 years and a day, and you just lived the last 30 years knowing that your family was protected. If anything happens to you, death or disability, you've got at least 300,000 or more that's going to be putting the family in a great place, totally protected. And if nothing happens, then all the 76,320 comes back to you like you never spent a dime. It's also the hardest policy to qualify for. The underwriting guidelines are the strictest. That's why I go through all of those questions, because I don't want to recommend something that wouldn't be suitable, that you wouldn't qualify for. But that's why we're here, is to see if they do qualify you. If we write an application and they take you, then I treat it kind of like you got into the best club you could. Once you're on the right side of that velvet rope, do not do anything to get out of that club. And it's a simple contract, honestly. You pay your bill, they assume the risk. You don't pay your bill, they don't assume the risk.
So you're saying if we do these policies with you, Brad, that if we outlive them, we're gonna get all our money back?
Right.
All of it? Is there any taxes on that? Or?
So no, it's a tax-free death benefit, and when the money comes back to you, it's not taxed either. So let's say that you made one $212 policy and you were in that plane crash. And so obviously within the first 2 years, that's the contestability period. They're gonna look, obviously. It's like you made one payment and they owe 600,000, they're gonna look. So anywhere between the first payment and the last payment, my point is that in the 30-year term, you either are going to die or you're not. I mean, everybody dies. When? Nobody knows. It's a 50-50 chance. Either you're in the window or you're not. So we're going to protect you for that window. And if you survive it, then you get compensated with like you never paid for it. And I always get the question, then what do I do? Well, buy yourself a little final expense policy. You're sitting on 76 grand in your case, 60 grand in your case. So I get this question also, does it have interest? No, it doesn't. But if you think about it, it's essentially a savings account. You're saving money aside, you know, U212, U169, and it's also got a huge death and disability benefit attached to it. So, I mean, your checking account, your savings account does not have a $300,000.
So if we apply with you, does that mean that we get the coverage right away, or how does that work?
Okay, so what that means is that we submit an application, and if they take you, it's going to be an instant approval or an instant decline. So we know right away whether or not they are going to take you. So it happens right here at the table.
Oh, wow.
Yeah, I'm the field underwriter, and so it takes probably about 10 minutes each. So what I need you to do is grab your IDs.
Well, wait a second. We just want to talk about it. Do you want to do this, honey? You know what, I don't know, do we wanna think about this? Yeah, wanna think about this? I think that we wanna think about it,
That's great.
yeah.
So I've probably done 1,000 of these meetings, and that's a pretty common objection, is that, wow, this is all new, and I'm not sure. I mean, do you have anything that I can read? Can I be honest with you? I mean, because, you know, I like you guys, and I want to protect this family. I used to hand out all kinds of literature. Guess what? Nobody reads it. And the very few that read it don't get back in touch with me. They either don't know what they're reading, they're not reading it, or I never hear from them again. So here's the thing. These are just numbers. They're not your numbers until you're approved. Does that make sense?
Right. So you're saying that there could be a chance that we're gonna pay more than that or less, or?
No, it's binary.
Okay.
Yeah, so that's what it would be if they took you, but
Okay.
I never know until we actually apply. That's why we're here, is to get you covered. So the process is like this. I have to see IDs. I write an application for each one of you. It takes about 10 minutes. The first process is, you know, name, address, social security number, and then we do a HIPAA authorization. So these are non-medical policies. There's no blood or urine, but they do check 2 databases. So it's all electronic underwriting. Simplified issue is what they call it. And we will know whether they take you right here at the table, okay? And so they're looking in Milliman's IntelliScript, and they're looking in the Medical Information Bureau database. And between your prescription history and your doctor visits, hospital stays, by law, all that stuff is logged. We will know if they're going to let us proceed within like a couple minutes. And then there's some qualifying questions that are risk-based that I was kind of asking you, you know, criminal history, traveling to Somalia, base jumping, that kind of thing, because it's all about risk. If we can get through that and they still approve us, we still don't know until we put in how are we going to pay and the final decision. And then upon the final decision, like I said, once you've proven insurability and they pull a premium, which we're going to do today to see if they can get you in, once you're in, I own the same policy, by the way. I own 5 policies. I sold them to myself. The first one I sold to myself, this one. And the reason that it's my favorite is because no matter what I do, I win. I mean, if I'm dead, I'm hoping I'm going to heaven. My wife's taken care of. If I become disabled, my bills get paid. I don't have to hurry back to work. If nothing happens, I get all my money back. And I'm on a 30-year term as well. I sold it a week before I turned 56, so I could still get the 30-year term. At age 56, it drops down to 25. 25. And I wanted the 30-year. And so I'm paying about $500 a month because I got it when I was older. I'm still healthy, I got a budget, but at the end of 30 years, I'll have put in $180K. So I can guarantee you when I'm 83 and I've got a cold and it's like, oh, this one's gonna take me down. No way. I got 180,000 reasons to make it to my 85th birthday. I want to live 30 years in peace and get all my money back. Does that make sense?
Yeah.
Okay. So does that make sense that the whole, I just want a number?
Yeah.
Because I'm not an advertisement. I'm not the sales guy that's just running around giving quotes. You can get quotes on TV or the newspaper, internet. And by the way, those are interesting numbers, but they're not your numbers until you qualify, okay? I always tell people it's not a toaster. You're not just going to say, well, you know, I think I like this one or this one. That one seems a little expensive. You don't need to health qualify for a toaster, right? This you have to qualify. And this is the hardest policy to get in. If they let you in, do everything you can to stay in. I know I do. It's absolutely an asset, not an expense. It's money well spent, in my opinion.
What do you think, Connie? Should we just apply? See if we get approved? What do you think?
Oh no, I'm gonna leave it up to you. Last time I told you to make a decision, you got mad at me, and I don't want that.
Okay, I'm sorry about that. Okay, yeah, we're gonna apply.
Okay.
Let's just go for it and see if we get approved.
So-
At least it will protect us.
So let's go ahead and start with you, Andrew. I just need your ID. Thank you. Okay, I open my laptop. I put in the information about the insured, do the health check, they sign, it goes up, it takes about 60, 90 seconds, it comes back and it says that we're able to proceed. If we're able to proceed, then we go through 3 screens of questions, basically all risk-based, both medical conditions and risky behavior, criminal history, you know, all those risky things like, you know, canoeing actually is on the list, which I don't understand why, but canoeing's on the list. We get through that and we submit, and then they give us a decision. If the decision comes back, does not qualify. Okay, so that happens sometimes. It does. Maybe you do the prescription check and something comes back and says we're unable to proceed at this time, the person did not qualify. Well, that's fine. We have multiple carriers and solutions as fallback plans. That's why you're sitting here in your mind. You know that you have other tabs open in your browser that you can pivot from the best option to the next best option. And if you get stuck, definitely call your upline and say, well, I just went and put in for an HMS 150 and it bounced back with a prescription check. What should I do? And then it's the prospective client's health, age, gender, and what you were trying to do, and they'll help you pivot to another product. But don't leave the house. Most people will not like being declined. Nobody likes being told no. What do you mean I'm not healthy enough, right? I have had people be declined that have never had medication. But, and it was the fact, I believe, I don't know, but I believe it's because they didn't have medication. They didn't see any history on them. They were 59 years old, very healthy, never been to a doctor. And so they couldn't make a decision. They saw no record. It was this lady that only went to Eastern medicine. She didn't believe in Western medicine, never been to a Western doctor. There was no file on her. And so you never know. People always think they're healthier than they are. You will know once you get through writing the application whether the insurance company thinks they're healthy enough. If they don't, it's not the end of the world. Just shake it off and say, hey, that happens all the time, and you pivot to something different. Okay, it may be a smart UL, it may be, it depends. If they come back and say, well, yeah, I guess I should have mentioned the heart attack that I had last month. Well, now we know why you were declined, and you are, now that's going to be straight to AIG, guarantee issue. And in this case, you guys aren't even old enough to get a guarantee issue. You're not 50. So, but there's always an option. There's always an option. So don't feel like you're ever alone in the house, that you always feel like you can reach out to somebody. But that's how you do a mortgage protection meeting. It is, you build a little rapport, you go through your financial inventory, you identify what is an appropriate budget and recommendation, all the while in your head narrowing down, and then you look for an opportunity to help them protect their retirements and set a follow-up appointment if appropriate. You look at your health, and I always give a grade. People love to get grades. Nobody gets below a B, by the way. You don't give somebody an F. Oh, you've got cancer? Oh, fail. Don't do that, right? It's not their fault that they got cancer. So nobody gets below a B, but I usually give out A's. Pretty much everybody gets an A, right? I think, if I gave somebody that just had a stroke an A, that would seem weird too. So it's like, I can't give you an A, but you seem like you're doing pretty good. How about a B? They glow with a stroke and a B. They'll take a B all day long. Always give a grade when you get down to health. And you're usually going to find some prescriptions and some, conditions. And if you're unsure, reach out to your upline. The objections we normally get in the house is that I want to think about it. And my number one response to the I want to think about it is, yeah, I understand, but these aren't your numbers. They're not real numbers. Quotes are meaningless until they're not. That's why I'm here. I'm not the quote guy. I'm the underwriter that writes the policy to see if that is your number. We'll know here soon enough. And if it is, treat it like a bar of gold. Put it in a safe, put my business card on there. Anything happens to you, death or disability, that thing is an asset, and it's my number one favorite asset because it protects me every day. If I don't come home today, my wife's fine. If I come home every day for the next 30 years, congratulations, I just lived 30 years and I get all my money back, and we both lived 30 years without worrying about how the bills are gonna get paid. It's a cake and eat it too. I love the HMS 150 cashback options for so many reasons. I hear time and time again people say, does everybody know about this? And it's like, everybody I meet does. I mean, if you just had a stroke yesterday, I don't talk about this because that would be mean. Hey, wouldn't you like to have this? Well, you can't.
Yeah.
You know, I'm not gonna, because that wouldn't be very nice. So it's make a suitable recommendation. If they qualify the profile like you guys set forward here, that's the best recommendation every time. So HMS 150 or 125, it does everything that you could need. Any questions?
No, straightforward.
All right, so you guys both got approved. Boom,
Yay.
You're in the club.
Yeah.
Congratulations. All right, guys, so I'm gonna go ahead and turn off the recording, but I'll be back at you just for a second in case you have any questions, okay?